58.03, 10, and 20. All right. Let's see what this market brings this morning. Kind of a little bit on the downside, not much. See where it wants to go. Welcome some of the new folks that are here. We're trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we just gave out. In addition to any price action trades that might occur, the levels are, as you can see if you have the chat up, the levels are in the chat for you. We kind of use them as a guide to the day. We can tweak those a little bit. We can add to them. We can subtract with them. We can actually sometimes not use them at all, depending on volatility and the price action. As we uptick here a little bit, got a little resistance around the 88, as you can see. Yeah, where it wants to go up here, came right up to 6.5. Green band and our platinum come in there at 89, and blue band and hourly coming there at 91. So a couple areas of resistance up here. See what it wants to do. It'll give us an opportunity to scalp or not. So again, we are scalping the market with this kind of volatility these days. We're looking for about 2 or 3 points on our trades. That could change depending on how how much they inject volatility back into the market. All right, coming up here to the 88 area now. See what it wants to do over here. Make sure whatever decision you make, you're always keeping your stops in place. All right, look in this 88 area here a little bit. All right, here we go. Give me just a couple quick points here on this quick rotation. You get a little bit more here, depending on if you're trading multiple contracts or not. Again, all we're trying to do is take advantage of ebbs and flows of the market. And nice little rotation here against our first resistance area here at 88. Again, all we're trying to do, like I said, is just take advantage of ebbs and flows. We don't believe markets go straight up or straight down. Consequently, we're looking for those inflection points that create opportunity for us. And the levels are opportunities for us, and any price action trades might occur also. Anything that I'm talking about as far as levels are concerned and or price action trades, we'd definitely discuss in our education course that we offer. If any of that stuff interests you, let us know. So nice rotation there against our first resistance area. Very slow. It's been slow lately. So I know VIX is trading at a 17 handle, 17. Probably because of that break on Friday, they pumped it up here a little bit. Next level on the upside we're focusing on is the 96 area. We do have a couple layers of resistance up here. Now I don't know if we're going to go through or not, but it is what it is. Again, got the 89 area there in that green band. We got the 91 there in our blue band, but you made money on the 88. Good to go. You're just looking at the 96 area. Looking at the 96 is our next area of resistance. Settlement price here is 91 and a quarter for those of you who are trading that little opportunity, depending on your risk tolerance. Otherwise, you're waiting for the 96 above.
Let me confirm these dates that I have.
Yeah.
Tuesday the 3rd and the 4th, right? That's
this week.
Yeah, of October.
Thursday.
Thursday and Friday.
Yeah, Thursday and Friday.
Then next week it was going to be the 8th to the 12th. So actually Friday's the 11th.
No, not next week. No, then it's we're talking the next.
November.
November.
Okay,
right.
Yeah.
It's October. It's October.
Yeah.
28th. Or whatever that is. Let me just check here. So October, 28th. October 28th through the 12th. So just Thursday and Friday this week.
Yeah.
And then October 28th through the 12th.
Okay. Through November 12th.
November 12th, yeah.
Okay.
Thank you.
You're going to be gone the 3rd and the 4th, correct?
This week, yeah.
Okay.
Thursday and Friday. You got unemployment this week.
Yeah.
Aren't you happy about that?
Oh, yeah.
100 and anywhere between 130 and 140. That's what I heard that the number is going to be. That's what non-farm payrolls they're expecting. Okay, for those of you who did take our settlement price, our blue band and our hourly, getting a nice little rotation here against it for those price action trades. Again, everybody here trades differently. I mentioned them, and it all depends on your risk tolerance. If you're going to take the opportunity or not, and everybody here, like I said, has different risk tolerances. Not everybody trades the same way. I mentioned those trades, but it's up to you to decide if you want to take those trades or not. And again, that was one of the trades that some of you like to take, the settlement price, and or it was also matched up. We had a couple of reasons there, the blue band and the hourly as well. So we had a couple of reasons maybe to jump in.
Will you be in it all in the morning on the 3rd? It's okay. Yeah. I'm just trying to get a handle.
Yeah, no, you better just take it.
Okay.
I'm not going to. You just better take it.
Okay, no problem. I'm gonna run my charts then.
Yeah.
Okay.
All right, so nice rotation there against the our first resistance area, and now against the settlement price. For those of you who like to trade that, like I said, it matched up with our blue band and our hourly. So a couple of reasons maybe to jump in on that little trade if you are so inclined. Gave you heads up on it. Again, not everybody here has to take every trade that shows up. Some of you have to find those trades that you are comfortable taking, that you can actually recognize when you're trading it, right? Recognition of a trade, very important aspect of trading, and then the execution part is the next part. So once we find a trade, you know, that if you can recognize the trade, you can recognize it developing, and then Yeah, then the next part, hardest part, is execute. How are you going to get in? How are you going to trade it? What are you going to do? Right? All those different questions have their own set of circumstances. Again, all that depends on how you trade as a trader. And like I said, there's not one right or wrong way of doing this. Everybody here, it all depends on your risk tolerance and how many contracts you trade and how you work around those areas once you recognize the trade. So if you took the trade, that's great. If you didn't, that's fine. We'll look for our next level there up at 96. Anything I talk about, by the way, is taught in our education course. For those of you who are new here, we do offer an education course to help us through some of these. The goal of the course actually is for you to be able to figure this stuff out on your own, know where your levels are, know why they're there, why we would pick them, and then to trade them accordingly. All right, so now we're just kind of hanging up here. Support would be around the pivot. Our pivot there at 79. Let's see if we have any other numbers coming out this morning. Okay, at 8:45 here in about a minute or so, Chicago PMI. Let's see what that does to the market. They really haven't cleared up the bids and the offers, so Chicago PMI coming out here in about a minute or so. As you can tell, it's probably already in the market. Yeah, as the market kind of floats here off of, we got up to 91 and change up there. Now, Chicago PMI does sometimes release to members a little earlier, so that's why it's probably already baked into the market already. But not really. It came off a little bit, numbers out, and really nothing else. Powell is talking at noon Chicago time. The topic is finding harmony in the noise, transitioning to a new normal. Sounds like heavy duty stuff that he's going to be talking about there. And that's at noon Chicago time. If you guys are around by then, like I said, we focus on the morning hours to give us our opportunities. We feel the dynamics work well with our methodology here. The volume during the day much higher than the afternoon, especially if it goes on and there's nothing going on. It's very, very slow, very monotonous. Not much is going on. You can drive yourself crazy watching it. Chicago PMI 46.1 versus 46.6, what they were versus last month at 46.1. Yeah, it didn't really affect the market that much. Something here that could affect the market here if they don't get this result. Thousands of dock workers at ports on the east and Gulf Coast from Maine to Texas are preparing to go on strike at midnight as negotiations with port employers for new labor contracts have reached an impasse. The work stoppage, which is all but certain, would be the first East Coast port strike since 1977. United States Maritime Alliance refuses to address the half-century of wage segregation where ocean carrier profits skyrocketed from millions to mega billions, while the longshoremen's wages remain flat, said International Longshoremen's Association. Union workers have been demanding better wages, automation projections, and benefits with their current contracts set to expire today. The work stoppage is expected to impact more than 50% of U.S. imports, while divert shipments will likely strain West Coast ports ahead of the busy holiday season. The strike is estimated to reduce U.S. economic activity by between 4.5 to 7.5 billion for each week it continues. According to Oxford Economics, each week that the cargo is stalled and backlogs create could take as long as a month to clear because the West Coast ports were already operating at near capacity. So, something to consider here as far as trading stocks here, and I'm sure it might get into the market if this thing lasts more than a week. Well, definitely last a month, that's for sure. Then we'll be talking something that could affect our market here. All right, we're just kind of hanging up here on these interim highs. We had a nice couple trades there, depending on your aggressiveness against our first resistance area there, 88. We're looking 2 to 3 points. We got 2 or 3 points out of that trade. Then we had a little push up here to 91, which I mentioned earlier before we got up here. Might have been a price action play for some of you. And that had a nice rotation against that. And now we're just kind of hanging up here. Nothing wrong with taking a couple nice little trades there, considering how slow it's been lately. And say thank you. All right, so nothing else coming as far as news is concerned coming out today. But like I said, Powell is talking later at noon Chicago time with the finding harmony in the noise, transitioning to a new normal. What is a new normal? It's the old normal. TBD. I don't know what the old normal was. It's a new normal. He will tell us. Maybe. Maybe he won't tell us at all. I don't know. All right, we're just kind of chopping around here a little bit. Again, patience is important. We average, and the keyword here is average, 4 or 5 trades a day. Sometimes it's more, sometimes it's a lot less, sometimes it could be none. We've had that last week one day. It was very rare that we don't have anything. But, yeah, it does happen. But the key word there is average. Obviously, we're going to get some days where we're going to trade more than that. All right, just kind of gravitating here to a little bit of a range bound. Again, let's just be patient and wait. We average, like I said, 4 to 5 trades a day, so we have a couple so far, again, depending on how aggressive you want it to be. Never got back down to our support level there at 79, just kind of got itself in a tight little range. And then we're down ticking here a little bit. Again, very, very quiet little trade. Got itself up here now. We're just kind of hanging. And a little support would be around the 79 area if you're a little aggressive. Otherwise, our first support level is down at 74. Now we're just slowly down ticking here a little bit, little support around 79.80 if you're a little aggressive. Otherwise, wait for the 74 on the downside. All right, market down ticking here a little bit. A little support again if you're a little aggressive. 80, 79 area. Got down to 80 and a half here. Up and back up here. You can see our blue band coming in there at 81. We were a little aggressive there. You jumped in. Again, everybody here trades differently. Recognition of the trade is half the aspect of trading, and then execution is the second part. Obviously, if you can trade multiple contracts, you can scale yourself into a trade. It'll be a little bit easier. Doesn't mean it's the right thing or not. All right, there you go, Phil. Now you have a good day. Glad you're okay this morning. And it's a little easier today. We don't have to work anything. All right. You can see here, the market popping off at it. Got down to 80 and a half, 79.80. We said there was some support. Again, depending on how you scale it, maybe you were able to get in or not. Otherwise, now if we go back down there, I would not take that 79 to 80 area. I would look down at the 74 area as our next support level. That's what I'd be focused on if we go back down there. If anybody has any questions, please feel free to ask in the chat. We don't mind questions. We are trading ebbs and flows of the market. No, that sounds like a good. I like the Irish green thing. You didn't make any connection with the red. And, but okay. But I do agree with you. Green is good. I think everybody here would agree with you. All right. The trade is definitely range bound, as you can see. Again, if anybody has any questions, please feel free to ask in the chat. We don't mind questions. We are scalping these markets, trying to take advantage of ebbs and flows. You can see the levels there in the chat that we gave out at the beginning of the day. For those of you who bring up your chat box, you can see them, and they're there to kind of guide us through the day. We average about 4 to 5 trades a day. I think average is a key word there. Well, that's a good question. I think that if you look at the chat, you see the question there about do you think about trading the founders less than the future? Well, you keep adapting, right? I've adapted to the markets changing. Algos they're becoming more and more, you know, they're there. They're not going away. They've been there for a while. The adaptation has to come with knowing when to trade. I think um, uh, obviously the we try to stay away from the high volatile moments like when numbers are released because we know that those computer generated trades could really kick um, into gear and then start going nuts. But I think if you look over a long period of time, you will notice that technical analysis has been around for a while, and even with the computer age and how they've started using programs and stuff to kick into play, that areas of support and resistance have always worked. But you have to know when to trade those areas of support and resistance. Obviously, when there is fundamentals that come out, like when Powell speaks and or when there's a big number to be released and or geopolitical situation that's happening, the fundamentals tend and will overtake the technicals. Saying that, I would say that maybe that happens 5% of the time, and the other 95% of the time, markets are trading quote unquote normal situation where they will rotate off of support and resistance levels. The volatility can change, and that's where we adjust. Like today, we're looking at 2 to 3 points on our trades. When they increase in volatility, where maybe we increase to 4 or 5. When the COVID situation came out, markets were really going crazy. We were at 9 and 10 points with our stops. Now, obviously, not everybody can handle 9 or 10 point stops, which is totally understandable, but that's not the norm. That falls into the 5% range. It took a little bit of time, but the markets did come back down to reality and start trading again, quote unquote, normal. And for the most part, I think that with a couple tweaks here and there, depending on the time and what geopolitical situation, whatever fundamentals could be given at any moment in time, I think technicals always work, and that goes back before we even started with trading, electronically. and on the screen, and before AI, these algos came into play, and the high frequency trades came in. All of those stuff, if you combine them all together, afterwards, they still have to get in and get out. And where do they get in and where do they get out is based on their technical analysis. So I think it will work. I think we have to tweak it if we have to. Sometimes we expand our levels a little bit so maybe they're not as close. And again, that all depends on volatility and any geopolitical situation that might come out or whatever fundamentals are out there. You have to make those adjustments as a trader, and that's why I think it's important that and I emphasize all the time that you are a trader. You have to make adjustments to the market, and just because we have a methodology doesn't mean that we have levels doesn't mean that you go in there and you use those levels nilly willy. You have to sometimes make adjustments. Sometimes we get close to a level, we never get filled, and we have to X out that level. But you can only do that if you were in front of your screen watching the price action, watching the price movement, and then adapting and then canceling those orders because you see that the risk is higher. And what we try to do is we try to explain the risk and on trades, so that way you can make that determination whether you want to stick with the trade or not. So, well, I think that the methodology works going forward. I do, and I do because I think we can always, the markets always have used for a technical analysis to give us areas of inflection, and I think that's going to always be the case. And if not, we sometimes have to make adjustments to volatility. The only reason those levels might not work is because we have to expand or the volatility is injected into the market, and we have to expand those uh, those stops. Yeah, but you have to remember that even those the algos that are out there, they have to also, if you don't, whoever is running that algo has to adjust also to market conditions as well. So whoever wrote that algorithm to trade, if you just leave that algorithm in without adjusting to market volatility, he's also going to lose money. At the end of the day, if you really think about it, all algorithms are based on however you program it, however that trader programs those algos, right? So at the end of the day, you're going to need that human interaction that uh, you are talking about to even adjust those algos. Because if you don't, if you're trading and you have an algorithm and your algorithm's working, and all of a sudden the volatility gets injected to the market for whatever reason or lack of volatility, you have to make that adjustment to the algorithm, or else you're going to start losing money on that algorithm. So again, we can have that fear. Now, look, I don't know. I just believe in I believe in trading. I also have been always saying that you have to be in front of your computer and make those adjustments accordingly. And every trade, every opportunity is not always how it seems. And as a trader, you have to make that determination whether you you want to take on that risk or not. And that determination is based on experience, based on what you've seen in the market, and based on how the market reacts sometimes. So you can at the end of the day, even all those algorithms have some human interaction with them, because if you don't adjust those algorithms are going to lose money eventually because they get outdated. So how those algorithms are going to work are based on how one individual inputs that information into that algo. So we are still going to be needed. You could do it with AI, absolutely, but you know, um, hey, uh, the charts have been around for a long time, right? And charts gives us our areas that we're going to focus in on. You're all asking, but you're asking very good questions, by the way, and I appreciate the questions, and I appreciate the discussion more than anything else. And that's on my own view. Obviously, you're a little bit more pessimistic on the outlook of traders. Um, I also believe that the younger generation traders who are used to just trading on the screen and don't have a background like I have, where I traded on the floor, I made adjustments when I came onto the came off the floor, which you have to make, and I think every trader has to make adjustments uh, as they every year based on whatever the market is giving us that year. Sometimes there's more volatility, sometimes there isn't. What moves markets, right? Could be anything. We don't understand what moves markets, right? I mean, we think we do, but at the end, as an individual, day trader, every day, we don't care what moves markets. We just care about the opportunity to have a trade, and obviously with your stop in place, and obviously with the discipline to know when that day is not working out to shut the machine down and come the next day, because there's always like an adage that I said this last week, that the most important things happening, that's what you do as a trader. um, and you could be scared of the future, right? Scared of trading the future, but hey, you know it's not something I'm really worried about, unless I can't imagine just flicking back and forth. The trades are going around like crazy. Not even those are the only times that happens is when there's our fundamentals, when there are when there is Powell talking or he makes a decision on interest rates. When the volatility in the market is crazy, we can't keep up with that. I will say that we cannot keep up with when the volatility is going crazy and the algorithms are going nuts, and that's why I say, and I've traded it and I've watched it, and I can't keep up when those algorithms kick in, because you don't know. First of all, there's no bids and offers in the ladder ticket, which makes it very volatile. The movements are uh, very crazy. We can't keep up with them as individuals, and that's when we have to know not to trade. So that's the thing. If you know when not to trade, that I think gives you an advantage, because that's the only decision we could make as a trader. You could trade or you could not trade. You can make a decision to trade the level, or you don't have to. You can make a decision to lower your risk exposure, or you don't have to. But those are decisions as individual traders that everybody has to make. And uh, I think we have to keep making those. I don't think that it's going away to anytime soon. The next 10 years for sure. Yeah, I mean, that's true. Yeah, we finding areas that give us those opportunities. That's the only thing that's important to us. And sometimes like I said, we right now, like it's a perfect example where we have to wait till an opportunity presents itself. Now, not every opportunity is going to be a positive uh, opportunity, because it's obviously not the situation, right? I mean, we don't expect every trade to be a winning trade, that's for sure. But that's why we also protect ourselves with our stops, and make sure that we are, we also make sure that if we get the market that day is just not working for us, and our algorithms are not, I mean, our methodology is not working, we know when to shut it down too. We can accept the fact that our day is not today, and we're going to close it down and move on and wait for the next day, because we don't want to get ourselves in such a deep hole that we can't come out of it in a day or so. And that's the most important thing. Make sure you come back tomorrow. I keep saying that because we're not always going to be right every day, but we can't. The days that we're wrong, we can't get ourselves in a deep hole. Right. We can't keep up with those algos, and that's why those are only done while I think most of the algorithms kick in when there's some volatility, and they kind of wait for those opportunities. But again, where they come in to buy and where they come in to sell, even with the algos, are all dependent, I think, on technical analysis. I do believe that. It should. Everybody, you know how many people have asked me that we should automate what we do, and absolutely you can. But the issue with automating even what we do, right, is making those adjustments because of the price action. And the thing about making those that's as traders, that's the advantage. That's the only advantage that you have, is to make those adjustments because of the price action. Sometimes those adjustments are easy to make, and sometimes they're not so easy to make. But at the end of the day, though, algorithms, when you put in an automated system, you can't make those adjustments quickly enough. So the thing about yeah, yes, but sometimes it also eliminates human emotion. Absolutely, and human emotion is a big part of it. I'll definitely tell you that much, right? But you can't be worried about that either, right? You have to give yourself a set of rules that you have to follow, and you know that if those set of rules have made you money in the past and they're very consistent in making you money, then you have to believe in what you're doing, right? And as long as you keep your stops in place and you have the discipline, then you have to just believe. I mean, it is an issue. Human emotion is definitely a part of it. It's hard. Everybody is different. And I keep saying that. Like, everybody trades differently. Everybody has different risk tolerances. I say it all the time, right? And I totally believe that. Because I know I witnessed it myself. And even when I'm standing on the floor trading, and I've said this many times, I could never trade like some of the other traders were trading. I mean, I'd be standing right next to somebody and he'd be doing something. I would never be able to do that. So that's fine. That's why I'm always also making sure that whoever is with us, that you find what's comfortable for you. And like I said earlier, whatever trades you see, you recognize, you trade those, and those are the ones that you find because you've seen them work before. And don't worry about any other trades that I might mention. Don't worry about it. We talk about a lot. I suggest a lot of trades sometimes, and it doesn't mean that you have to take them. But you have to find the ones that you can recognize on the screen or recognize on the charts, and take those and trade those as well. Of course, they are. Everybody loses money. Even the algos lose money. There's Maureen. There's no way that every algorithm out there makes money. Okay, just doesn't. There's just that. It just does not happen. Say that. The only people that don't lose any money in trading is Goldman Sachs. Okay, that's it. But they got inside information, so that's what I would say there. I'm not saying that. I'm saying it half joking. I agree with you, DL. I think that's true. That when like I said, I had 95% of the time. I said the 5% of the time that we try to stay out of the market. That's because of the volatility that's injected into the market when there are, you know, fundamentals that attack the market. Right, I agree with you that it does take a little bit it's whatever the most important thing is that whatever methodology you're going to employ, that you are comfortable with it, that you have faith in it, and you believe in it, and you've seen it make you money. And people who've been with us here for a while, I think, can attest to that. And and that's the most important thing. So Yeah, no kidding. I hate it more than anybody that floor trading disappeared. Trust me, I'd rather be yelling and screaming at an individual than with my mouse in my hand. Well, at least I get to talk to you. But I don't scream at you like I used to scream at some people standing around me or even across the pit. Yes, unfortunately that that is that's I would pay anything to get that back. Obviously, I was good at it, and it was camaraderie. It was tough. It was not easy. Okay, this is not an easy game. Even trading on this electronic, and that's not an easy game. Like I said, we've had to make adjustments here. When I first made the transition, didn't know what I was doing. Thought it would be the same as trading on the floor. Absolutely not. I've had to dial it back. I pick my spots here. I hate not trading. Let's put it that way. But I've also learned that uh, I have to do it this way. Otherwise, I am not going to make any money. I think picking your spots is probably the most important thing that uh, we can do. Yeah, Craig, we would do anything to get it back. But you know, it's not like we're asking to get back the dial phone. This is what happens, right? We have a flip phone, and technology moves on, the world moves on, and we have to move on too, right? So that is what it is. All right, we're down ticking here a little bit. A little support down at 74. Very, very kind of quiet trade. At least we had a nice couple opportunities there um, against our upside resistance areas. Again, we're coming back down here. Whatever you do, whatever decision you make, you're always going to have your stops in place. We are not going to love any trade we put on. And again, if you made a little bit of money the top end there and see how quiet it is and slow it is, maybe you can just trade a little bit smaller so you keep some money. If you make money on it, great. If not, then you're done for the day. You're up, and because it is just slow. I hate to just tell you not to trade, but that's what I'm kind of trying to tell you to do. Especially if we made money on the upside there. I always knew that about you, Maureen. You just creeping into looking for those footprints all over. I get it. I get it. Yeah. Well, again, uh, algos are great. I mean, look, I had I was uh, had a friend of mine who wrote his own programs because that's what he was, a trader, and then he got into the computer stuff early on. And so I asked him one time, I go, well, what if this happens? And he goes, well, then it won't work. It's like, oh, so what do you do? Well, then I have to rewrite it. I'm like, oh, okay. And it's like, okay. So I go, so basically you have to be standing in front of your computer watching it in case that scenario happens. You have to adjust. He goes, yeah, kind of right. Okay. So that's what we do. We are trading, we are adjusting. And sometimes we adjust the right way, and sometimes we don't because you're not always going to be right. And again, we try to keep it the morning hours. We are here till about 10 o'clock. We feel like if we're going to make our money, it's going to be in the morning. The dynamics work best for us. volatility. More traders are trading in the morning, so there's more volatility, and especially these days when there's not much going on, as you can imagine. They do, suck the volatility out of the market, and nothing happens the rest of the day. And something could happen, but we'll wait for it to. We'll trade it in the morning when that happens. But to sit there in front of your computer all day, it is tough. So we focus more on the morning hours to give us make a little bit of money. Like I said last week, we didn't. We had a day where we did not put a trade on, and that takes a lot of discipline, right? A lot of discipline to not put on a trade because that's what we like to do. We like to trade, but that never gave us that opportunity. And you have to, as a trader, make that determination that this is what we're going to do, and it's great. If it gives us that chance, great. If it doesn't, okay, it's fine. Now we did go right down to our pivot area there. I had that little support area early on. It, it inched down there, got right down to that 79, and then popped right back up. So if you're very, very aggressive and you like to trade our pivot rotation, you got paid off here. Again, everybody trades it differently, and I mentioned trades. Those are up to you. We recognize those trades that worked for you in the past. You like to use them, you use them, right? It's always been my motto. Doesn't mean that I don't use it. I probably could put on more trades if I wanted to, but I try to be a little bit more patient. I'm a little bit older. Trust me, I do not like sitting around on my hands doing nothing all day. All morning, I should say. See, this was good conversation. This this was good. Thanks for your question or remarks, comments. Put us into a good discussion. There's nothing going on. I'd rather be talking about trades, next opportunity, but sometimes it's just not there for us, so that's fine. And a good discussion this morning. Was definitely too bad Philip left. He would have liked this discussion. I think he would have had a couple interesting comments. But then he made his money and he's out of here. So that's I got nothing wrong with that either. All right, got ourselves back into this range. Again, if you were looking to jump in, the pivot area there was a little bit of a buy. He is very good at getting Greenland going. Well, we have a lot of people who have other businesses here, so they like to trade the morning and take off. My mindset here, because standing in front of this computer all day could get a little bit tough, especially not much going on. See how boring it gets. Can't watch it. You just can't stay in front of the screen all day. Just way too much. All right, now we're pushing up here to these highs. Nice rotation there. We pretty much covered our whole range this morning in the last 5 minutes, and this is what happens all the time, right? Yeah, no, absolutely, Maureen. It's definitely not the way to go. And look, when I was on the floor doing this, I would stay in front of the screen all day, and it just wasn't good. Wasn't good. All I can say. I'd make money in the morning and lose money in the afternoon because, hey, why not? Why not keep trading? So I decided, you know what? It's not going to be working out too well this way. You can't make money in the morning and then lose in the afternoon because there's nothing going on, and then you're like, you're in front of your computer and you're like, all right, well, I'll trade some more. Why not? There's a good reason why not. Alrighty. All right. Again, next upside resistance up at the 96 area. All right. Well, trying to expand this range, but you can see here they're getting a little bit not happening, which is fine. Um, 96 upside. Downside support at, well, 74. Now we're just kind of hanging up here in these interim highs. Upside resistance up at that 96. And again, just kind of patience, wait for the market to give us that opportunity. Looks like we're probably going to stay in a little bit of range, but I'm not a range player. I don't like to trade the range. It's not my favorite trade here. Some people love trading the range. They get to the top of range, they sell it. They get the bottom range, they buy it. I'm definitely not a range player here. I always seem to get in at the wrong time and they bust through for me. And so I decided instead of trying to guess, I'm just going to kind of just hang loose with it. And we'll just wait until we get to a level. And if anybody has any questions, any comments, anything, if you want to ask anything about what we do here, please feel free to ask in the chat. No money questions. And we do this on an everyday basis here. We make the trade when the market gives us some opportunities. And that's all we can do. Let's wait for the opportunity. They really know when to pull the plug here. Don't they? Alrighty, they've just tightened up the screws here. The ranges are getting a little tighter here, unfortunately. 96 is our next upside resistance. I don't know if we're going to get there or not. Again, whatever trade you put on, you're always going to have your stops in place. We're not going to love any trade we put on. Alright, we're extending here a touch. Shall see where it wants to take us or not. Well, we thought we were going to extend here a little bit, but they just kind of stopped. So up into this range. So again, nothing really good, really great. Just again, patience. And again, we come in here to the end of our morning session. I don't know if we're going to get any other opportunities, but we've had a couple against our top level there, which turned out very nicely for us. And maybe if you're a little aggressive, maybe you bought the pivot rotation back to the pivot there. We got long there before this little flash run up here. Either way, hopefully we were able to make a little bit of money with a couple opportunities that we had. If you just use our level one on up at the 88, I think you did all right with that. Because this time you got filled at 88 because we got up to 88 change and it came off. Sometimes, we don't get filled there at our number. We have to scale in and we just missed it by a little bit, but this time we actually got it. We talked about the 91 area as well. For the reasons we talked about, we rotated off of that very nicely. And we talked about the 79 to 80 area being some support, got down to 79 change there and popped back up as well. So again, depending on how aggressive you want it to be and your risk tolerance and what your goals are, and maybe we're able to get in and jump a couple of these. If we did, that's great. Really, that's only trades that we talked about today. Didn't really talk about much else because we've been range bound here, tight little range from basically 90 to 80. Which again, again, we have to wait for volatility. We can't create it. All we do is trade it. And sometimes there's a lot of volatility, and sometimes there isn't. All right, definitely got ourselves into a range here, unfortunately. Well, fortunately, that's what it is. All right. Again, if anybody has any questions, feel free to ask in the chat. We're coming here to the end of our morning session, and we discussing the areas that we're focused in on. Um, Again, we can't create any volatility that's out there, so we have to be a little bit patient. If you have any questions, please add them in the chat. Otherwise, we'll get back here in a little bit.
At least 50? At least 50? $850. At least 50. 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 650? At least 50. 650. At least 50. At least 50. 50.